All right, it's shaping up to be a very consequential week for the US economy. We've got several key announcements coming up soon. Today, the Consumer Confidence Index for July is set to be released. Tomorrow, we'll get a second quarter GDP look at the data and a key interest rate decision from the Fed. And then on Friday, as you see on your screen, we've got the jobs report and President Trump's tariffs, by the way, they're scheduled to hit. Javier David, his inbox is full, I would imagine, because of all that. He's here with more now. He's the business editor for the Dallas Morning News and a CBS News contributor. Good morning, Javier. We appreciate you replying to our emails. What are you looking out for this week of everything we've just mentioned? Which is the most significant?
Yeah, look, it's a trifecta week. We've got sort of data palooza, we've got the earnings motherload, and we've got the Fed decision. So we're about to learn a lot about the state of the economy. Conditions aren't perfect, but prices are still higher relative to historical norms, but they're stable. So we have unemployment that's still closer to 4% than anything else. Job seekers are having a clearly tough time trying to find new positions. It's not gangbusters, but it's certainly really strong. So CEOs, we've heard, we're in the thick of earnings season, so we've heard from a lot of CEOs, JP Morgan, Capital One, Coca-Cola, all of them are saying the same thing. And the consensus is that the animal spirits of the economy are still purring, even if it's not roaring, and the risks are skewed to the upside. But consumers are still holding up, and that seems to be showing up in earnings as well.
How might that translate through the Fed's decision? The Reserve is beginning its meeting today. For people who are looking to purchase homes or take out big loans, they want to see an interest rate cut. How might all of this factor into that decision?
Yesterday, just by coincidence, I had an interview with the CEO of Texas Capital, one of the bigger local banks here that's big in commercial lending, and he said a couple of interesting things. One, he felt that rates were not restrictive, and his
Hmm.
bank's results actually showed that. But he also said that a rate cut is almost suggestive of the idea that something might be wrong in the economy. So the takeaway is don't hold your breath waiting for a rate cut. They're inching toward lowering rates at some point. It's not likely to happen this week. Markets at this point only see maybe a 3% chance of that happening. But by the time we hit September, it's like it jumps to 64%. So
Right.
expect more focus on some of the dissenters and the dot plot that we always talk about. But the end result is the Fed is still on hold and they're not really, don't feel any urgency to cut rates at this point.
It's interesting, too, because when you look at market reaction to the US EU trade deal, which we've been reporting, it seems muted. It doesn't seem like there's reaction in either direction. So does that mean that tensions have eased in a way when it comes to these threats and the relief?
Yeah, look, I think markets have been looking for clarity, and we're getting some of that. The administration is still negotiating trade deals, but they insist that August 1st is a hard deadline. Agreements could be struck afterward, but there are not going to be any more extensions. So markets have sort of coalesced around this idea that tariffs are higher. These are the highest levels that we've seen in about 100 years, according to some Yale data. For countries that are still at the negotiating table, don't expect anything lower than 15% rate, even if you invest in America. As far as the White House is concerned at this point, it's almost that tariff rate is kind of the new cover charge for the privilege of doing business in America. I guess it's the best way to think about it.
Trump tax, perhaps. Javier David, great to chat with you. Thanks very much.